All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, and subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So it is Friday afternoon. Market's set to close here pretty shortly. And Spider's seeing a pretty good Friday, another Friday sell. Spider's down 2% here. Triple Q's down just shy of 3%. They may try to flush it down into the close and get that 3% whole round number out of the way. You're seeing the IWM just off of the lows. Actually made a little higher high here intraday, and then the Dow here right near the lows as well. And not really a news event here that's moving the market, although this morning we had inflation data. We had PCE that came in slightly hotter than expected. We had Michigan consumer data that came in a little bit hotter than expected. But my guess is this is something a little bit more. That's what's going on here. The market was fairly well hedged, I think, for the inflation. And that is kind of an expectation right now. But I'm hearing some rumblings now about maybe some margin calling going on here. So we had some forced liquidations in T-bills. Nikkei was down quite a bit last night. You can see the 1 month there. Then there's the Nikkei 225. That took a pretty big hit, obviously trading before U.S. markets open. And even the almighty Europe market, the DAX was down, today, although structurally it's still hanging in there okay. But you can see there's something else going on, in my opinion. And we may be getting news over the weekend. Somebody may know something. The reason why I say that is if we had hot inflation data, that means bonds should be what? Down, right? Well, yields are getting crushed here. So 10-year down 2.61% on the TNX, 30-year down 2% as well. So those yields are coming down. Note here, ZN up almost 70 basis points. The long end up 1.19 on ZB, and then we have the 2-year here up 16 basis points. So the long end's higher. So it is a little bit more like a risk-off situation here. And we were kind of teetering there. I did close out my yield play for a small gain, as that was a little bit of a surprise here. Even though we had that hot data, you could see an initial, and I mean initial, like barely a little downtick there in bonds, and then just right back up. So either this market is calling BS on there's a couple of scenarios. The market could be calling BS on the inflation data, saying that no, we're actually getting something to the opposite. Or there's just a lot of bond shorts and they're getting squeezed. But either way, the market is coming down here, and the uncertainty is a factor, right? We have that in play. We have the money going home to Europe. We have tariffs, right? Non-stop tariff talk. It just never ends. We had more on Wednesday, and we'll get into what happened earlier in the week in a minute. But that's what's causing this issue for the market, because it cannot quantify what's going on. It's more of a uncertainty issue. And yes, there's the stagflation risk and whatnot, but that's not so much, I think, yet. I think it's more the uncertainty. But the way the bonds are trading here wouldn't shock me if we did get some sort of wacky news over the weekend here. Another thing, too, is, kind of maybe on the shadier side, I'm very interested to see where we open and close Monday. Because we are 10 points above the JPM collar. And notice how we sold off hard all day long, and we got within 10 points of that, and then magically we stopped selling. So that will come into play, and that will expire finally. Finally, that will expire on Monday. They will roll it, but it'll have another 3 months, so it won't be as much of a factor right now. But it is not a coincidence that we sold off 2 days before Feb OPEX, and then we bottomed at 55.65, made a slight new low, and now we're coming right back to that area. So I'm interested to see where we close Monday. Do we gap down and flush here, or is it just a nothing burger, and was this just a retrace? But right now, either way, a very good move here. Let's talk about the structure. So ES, we talked extensively about this trend line on last Friday. We did reclaim it for a whole 2 days, essentially. Well, no, 3. We held it by Wednesday's low. But we reclaimed it, and we finally got we'll call it a relief rally. It's not much. Honestly, I haven't seen in my career too many times that I definitely can't think of off the top of my head where we didn't at least retrace 50% of the move after a 10% decline. We're not talking about a little 3% pullback here. We're talking about 10% decline. The fifth fastest 10% decline ever. And we didn't even retrace 50% of that on the ES or the SPX. So very interesting to see how they're making a beeline for these lower prices here. Now, that's why I say Monday's close will be interesting. Do we get news over the weekend? Do we have a bloodbath? I think best case right now for bulls here, if there is one, is, and I think my trend line here needs to be adjusted. Yeah, it does. So these contracts always mess everything up. But I think base case here, best case for bulls, is either a nothing burger Monday, which would be a head that would make today a head fake. But I think you come down and you kind of sweep this low, and then you get your big bounce there. So a lot of the times when you have a big decline like this, it doesn't just bottom, and very rarely will just bottom like this. A lot of the time it's going to come back, steeply retrace. In fact, you can see, yeah, right here, right, we had a big bottom. It retraced there. We had one here. Even in April, we had a very good flush out. So that has happened many times before. I'm not saying that that's going to happen. I'm saying that's what you would look for in the bull case. And then the bear case here, I still think around 5,400 ES and, even on SPX is pretty good support, maybe 5,350 now, because we've had a little bit of a bounce. If we had rolled over this week somehow, I think 5,400 would get bought easily. That would be a no-brainer. At this point, it's probably a little bit lower. That said, we do have some important cycles coming up next week with end of quarter. So there's a big date here, and it's a pretty big cycle. I don't want to get into the exact detail of how I calculate it, but it's a big Gann cycle, and we should be looking for some sort of pivot. But it's a bit of a longer-term cycle, so it can take 3 to 5 days, right? And that, obviously, that you might say, well, that doesn't help us much. Well, you kind of got to give it some wiggle room. And if we're looking for a major pivot, sometimes they can take a few days to manifest. That said, I don't think that we're necessarily, even if we get a pivot here, I don't think we're necessarily out of the woods till probably the middle of the month here, unless we get a really big washout. But right now, good decline here. And yeah, like we said, bears in control below this trend line. And the second we broke below it, they had control right back. So never really got to my target here. I was looking for 58.50 on ES. We just didn't quite get there. And that's a little frustrating because I would have liked a nice hedge for this or a volatility play. But sometimes you get close, no cigar. That's the market, and that's the way it goes. But anyway, spiders down here today. I think we're dipping a little bit into the close. Yeah, I would say watch. I'm just very interested to see how Monday plays out here. So I don't have much insight. I don't like these Friday sells because you never know. A lot of the time they're games, right? This one right here was a pretty good one, and then they just gapped it up the next day. We've seen that plenty of times in the last year. I believe, yep, this one was, this is a Thursday. Oh, no, this is a Friday right here, and then they gapped it up Monday. So we've seen them do this before, and that's why normal circumstances, they say, oh, this is a easy bear layup here, but I've seen this so many times right now. But nonetheless, good sell. There's the Qs here down 2.78. This is a positive for bears. You want to see the NASDAQ leading to the downside. The NASDAQ and the Russell. I will say that the Russell has actually held up a little bit here today, relatively speaking. I think a lot of that has to do with the whole round number at 200. It's probably an end of quarter thing. The Dow here holding up better than all four indexes, though, down 1.78. And that is, again, very typical when you're in risk off. Money goes to blue chips, and you can actually see, XLP still an inside day, XLU green, XLV, flat to lower. So defensive's getting a bid. By the way, again, XLU classic risk off bid. It's more of a deflation risk off bid though, right? Not inflation, and that is maybe it's just a one-day thing, but find it interesting. Bonds pumping as much as they are, gold pumping. We'll talk about gold. I know you guys are waiting, but we'll get to that. Bonds pumping, gold pumping, utilities pumping, and markets down. That's more of a classic risk off, and I know that may not make a lot of sense, but that's what the market's saying right now. We'll see if that's just bond shorts covering, but that's what we're looking at. Anyway, SMH here, it's still was trying to hug this trend line earlier. Now it's starting to break down. I do like the semis down around that 200 handle. So there's a couple of trend lines coming into play here, and I do think that is a good area if we start to wash out here over the next week or so. So we'll just keep these, keep your shopping list open. There will be a very good bounce when we get the chance, but right now, just let the market dictate. IGV continuing down, although it's trying to hold on to weekly support right now, and it's basically there. We'll give it the benefit of the doubt. The market's about to close here, so it is holding on to that level. Transports here again with a soft week. It had a nice little bounce there. I love that liquidity grab last Friday. Just couldn't follow through, and when the whole market's weak, it's just going to take everything down. So under normal circumstances, that's a really good candle I like to play. Sweep of the low and then closing back up. Always look for those types of plays. And you can see it followed through a little bit, but this week not so much, as we're just, tried to consolidate, tried to put in a little flag there, and just rolled right over on the 20-day moving average. We talked about rates here, but I'll quickly just cover the 10-year again. I was expecting bonds to get up to, actually, let me cover the 30-year. So I had more work done on that. The same thing, but I was expecting the 30-year to get up to around 4.8, and then I was looking for, maybe a rollover. We may be starting that early, so just throwing that out there. So this timing is close, not quite on the money though. If this ends up being a rollover here in yields, I don't think that they're going to go to new lows or anything like that, but we could see yields back off over the next couple of months, I think even. But we'll talk about that more once we see kind of a resolution here with the stock market. XHB down 271, and again, it's losing that weekly level. It is above the local low, but this has been hitting this for a while. I think if that can, and again, don't get upset when things sell off. It always brings opportunity. If you get a chance to buy this back at that previous all-time high, especially down with the weekly 200, I mean, there's going to be things that go on sale, and that's what corrections are for. But in any case, if that gets down there, I don't know if it does, but there's things to look at here, and this is what you got to do during these periods. VNQ down 27 cents. It's holding up. It's holding up, relatively speaking, anyway. But still got lower highs there. Not a good look overall. Financials finally came down, but again, still testing this trend line here. So technically not even really a breakdown yet on XLF, but it did come down today weekly. Really choppy here. Got a big outside candle on volume though. We got to be careful of that. KRE here down 2.1, and not on a lot of volume. By the way, speaking of volume, before I forget, spiders don't have a lot of volume here. I don't recall a 2% down day where we traded less than 100 million shares. Maybe I'm wrong, but I mean that is really light volume for SPY today. Anyway, yeah, XLF, KRE coming down, KBE down, broker dealers down too. So there's possibly 3 lower highs on the broker dealers now. So this may be topped out now. Finally, we know we've been saying it's on borrowed time for a long time, but it's getting sliced here. If it loses that monthly breakup bar low on a close, that'll be in play Monday, by the way. Then I think it's really confirmed. Oil backing off here, and again, oil down. We had all this inflation data. Why is oil down? So you got to ask these questions. Was the market talking to us? But oil backing off at 70. This can still base though and go higher. Just FYI. XLE is down today, but it's off the lows, right? This is still outperforming. And I'm still liking my Exxon. That's doing well for me. That was one of the things I held during this drawdown. I did close pretty much all longs up near the highs, and that was one of the few that I held. I'm comfortable holding that dividend payer into a drawdown here. But that's got to get through 120. It's going to take some time, though. XOP down less than 1%. So again, energy is still the strongest here. OIH backing off at 270. We got CCJ backing off here, down 4 days in a row. Not really good. Good rejection there. And then URNM, if this makes a new low, you want to see it reclaim, 34, 35 pretty quickly. So be careful with these uranium plays. They are coming in too. Pretty much everything's getting hit right now. See small caps getting a small bid right now, so we might be getting a little relief bounce here until the close. But nat gas, kind of a flat to actually positive on the week now, isn't it? Yeah, positive on the week. Yeah, if this consolidates here, it can go higher, and it's trying to do that. So we talked about the, I warned about this. Whoops. I warned about this reversal here, but I said if it just holds up, it can consolidate this move and go up to six, $5, $6. So just be aware of that. This is not dead yet. So NatGas still hanging in there. Dollar index, kind of a choppy week. Looks like it's basically flat. It's got room for a higher low now, but and maybe you've got like a WV kind of look. It's not the greatest. We'll see. I think the dollar can move higher, but it's still kind of choppy here. It's in more of a relief leg than anything. The yen versus the dollar, or to say dollar versus the yen, has come down, but you still have this inverse head and shoulder in play, and it has not failed yet. If it breaks below this low, or below this trend line here on a close, then we'll consider it failed. Gold at new all-time highs. I did trim out the last of my gold swing, just so you guys know. The reason I did that is because, well, if you guys recall, I did an article on this, and you can see we're at my target here. So if you just take the measured move here from 2022, it's about $550. Each one of these legs is about the same distance, and we hit that today. That's not the only reason I sold, though. There's, Goldman, is I'm sure many of you guys are aware. If I can find through my mess of tweets here. There you go. Goldman raising their price target. I don't like that. In fact, they are usually the fade when it comes to these types of things. Why didn't you raise the price target here or here or here or here? You're waiting until, now we filled out this measured move target. I just don't like that personally. So I did close out my run. I still have silver though. And the reason for that is typically the way it works is gold will put in a high and silver will make another high after that. I'm not saying gold's an outright sell here, by the way. It may just do some extended consolidation. But for me, as far as my swing trade is concerned, which I had UGL, closed out a really nice gain on that. I just felt like this is a good area to cut it. For those of you who follow GLD, just a freebie right now, this has upside to 290 in the near term. That's just options market dealer positioning. So it could go a little higher. I'm not saying it can't. I'm not saying I'm top ticking the exact tick, but I think we're getting a little top heavy. So that's just me. I still think silver's going to 38 then. So hold that. Platinum, not much interest in trading that. Palladium, not much interest either. Copper may have topped out here in the near term. I will say though, nice double top by the way. Yeah, perfect double top with a good tail candle. A lot of the time when these things do this though, they'll do something like that and then they'll come down. Because a lot of people, by the way, somebody got blown up here on margin. I don't know what it was, but somebody got blown up there. I can show you the intraday. This was at like 7 or 8 o'clock at night. That's unusual to see that volume. So that's a margin call. So I think that may have marked a high in copper here. So just throwing that out there. Lastly, Bitcoin rollover. So it was green on the week until now. So, rolling over like stocks. This is way higher off the lows, though, than stocks are. But, I mean, you now have lower highs here. You got to be careful with this. So I haven't played with Bitcoin in a while. But, I don't know. Might even be able to go past. I mean, there's still a very big level here, the previous all-time high. Depends on how fast, if and when it even gets down there. That could be an area. The faster it gets down there, the better that support will be. But if it consolidates here, like this, sorry, like this, it's going to be weaker. So just keep that in mind. But anyway, we'll see what we get next week. Again, I'm very interested to see where we close. Remember, JPM color at 55.65. Oh man, I just would be typical if they gapped it up Monday. But right now, yeah, bears control. Below that for me, really the big line in the sand is this ES trend line here. And that's kind of like trending lower, obviously, every day. But yeah, watch Monday. If we flush out, we could see some sort of reversal. but I don't think the volatility is necessarily going away just yet. So keep that in the back of your mind. Anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com. We'll see you guys all next week.